Hello everyone, and welcome to Unit 7 of our educational series, Stock Investing 101. In this lesson, we will be focusing on the fundamentals of stocks. Learning about stocks can give you valuable knowledge and skills to make better investment decisions, build wealth, and achieve your financial goals. Our today's lesson has 4 objectives. First, we will discuss what stocks are. Second, we will be exploring the different types of stocks. Third, we will discuss why companies issue stock. And finally, we will learn what a dividend is. Let's begin with the first objective: what are stocks? Stock, also known as equity or shares, represents ownership in a company. When you buy a stock, you buy a small piece of the company. As a shareholder, you have a right to vote on certain matters affecting the company, and you also have the potential to profit from the company's growth. Imagine a company is like a delicious cake. The cake is divided into many equal pieces, and each piece represents a share of the company. When you buy shares of that company, you are essentially buying a piece of the cake, and you become a part owner of the company, just like owning a piece of the cake. Just like how each piece of the cake represents a portion of the whole cake, each share represents a portion of the company. So, if you own shares of the company, you have a stake in its ownership and success. If the company does well and its value increases, the value of your shares, represented by your piece of the cake, may also increase. Similarly, if the company doesn't do well, the value of your shares may decrease. This means that you could potentially sell your stocks for a higher price than what you initially paid for them, making a profit. It's like selling your cake piece for a higher price than what you bought it for. Alternatively, you can choose to keep your stocks and receive dividends. Dividends are a portion of the company's profits that may be distributed to shareholders as cash payments. In a real scenario, a company is divided into millions of stocks. The number of stocks you own represents your ownership in that company. Stocks are typically traded on stock exchanges such as the New York Stock Exchange, where buyers and sellers can trade shares of publicly traded companies. The prices of stocks can fluctuate based on various factors, including the company's financial performance, market conditions, and investor sentiment. Investors often buy and sell stocks with the goal of making a profit by selling their shares at a higher price than what they initially paid for them. As an investor, you need to change your mindset when you think of stocks. Think you are becoming an owner of the company. Always remember, stock is equal to ownership of a business. Moving on to the second objective. Types of stock. There are 2 main types of stock: common stock and preferred stock. Let's see a few differences between common stock and preferred stock. When it comes to stocks, most people are familiar with common stocks. A common stock gives shareholders voting rights and the potential to earn profits through dividends and capital appreciation. Preferred stock typically doesn't come with voting rights, but it has a higher claim on the company's assets and earnings and often pays a fixed dividend. Preferred stocks are more like bonds. When we buy stocks, we typically buy common stocks. We hope this information has helped you understand the distinctions between common stock and preferred stock. Are you wondering why companies issue stock? The primary reason companies issue stocks are to sell ownership stakes in the company to the public to raise capital. By doing so, the company can access a broader pool of potential investors and raise more funds. The money raised from issuing stocks can be used for various purposes like paying off debt, launching new products, expanding into new markets, building new facilities, or enlarging existing ones. Now you understand why companies issue stock. You might be thinking, why investors buy stocks? The biggest reason is capital appreciation, where investors expect the stock price to increase over time. They like the business and think it will grow in the future. Dividend payments are a share of the company's profits paid out to stockholders. Some of the good companies, like Johnson & Johnson, have been paying dividends for the last 150 years. Ownership, voting rights allow shareholders to participate in the company's decision-making process and influence its actions. Finally, let's talk about dividends. A dividend is profits shared by a company to its owners, usually in the form of cash or additional shares of stock. It's like getting a reward or a portion of the company's earnings for being a shareholder.
Here are some key points to understand the dividends. The purpose of dividend is to distribute their earnings to their shareholders.
Dividends are usually paid on a regular schedule, such as quarterly or annually.
The dividend amount is determined by the company's board of directors.
Dividends are taxed as income, so shareholders must pay taxes on their dividends.
What is dividend yield?
The dividend yield is a financial metric that indicates the percentage of a company's stock price paid out to shareholders in the form of dividends over a certain period, usually a year. It is calculated by dividing the annual dividend per share by the current stock price and multiplying by 100. For example, if a company pays an annual dividend of $2 per share and its stock trades at $50 per share, the dividend yield would be 4%. It's important to note that not all companies pay dividends, and the decision to pay dividends is at the discretion of the company's management. Some companies may choose to reinvest their profits back into the business for growth or other purposes instead of paying out dividends. That concludes our lesson on the basics of stocks and dividends. We hope you found it informative and valuable.
We would love to hear from you in the comments section. Have you made your first stock purchase, and which company do you believe is the best investment opportunity right now?
In our next lesson, we will dive more into the topic of the stock market, so make sure to stay tuned.
Thank you for watching, and don't forget to subscribe to our channel for more exciting investment content.